Good morning, ladies and gentlemen. Good day, and welcome to the show. Glad to have you guys here today. Today is Monday, the 22nd of March, 2021. Boy, time's flying by, I'll tell you what. Now, here's the thing. uh, Turkey is having a lot of trouble with their lira. And what's happening is they're just starting to descend toward hyperinflation. The lira lost like 9% of its purchasing power, or 9% of its value against other currencies in one day. And Turkey's a big country. Let's get started. Let's open up the charts right here and take a look at what's going on. Wall Street Journal. Turkey's currency tumbled 9% on Monday, putting it on course for the biggest single-day sell-off since 2018. The lira fell as low as $8.2 from 7.29 before regaining some ground in trading. Evidently, the president of Turkey, Erdogan, he fired a central banker. Let me see. What was the central banker's name here? Anyway, the central banker was raising interest rates to try to keep the inflation under control, and Erdogan fired him, and because of that firing, the lira has fell really precipitously. Let's take a look at the lira on the charts here. Maybe I can get this chart enlarged. I don't know, but anyway, you can see right here in the end where it fell off. This sudden drop, and it's down to one Turkish lira is equal 13 cents right now, and it's falling. It's still, well, it stopped falling like it was, but it's still in the process of falling. Let's take a look at the. Here's what I want to tell you guys. Unbelievable situation going on in the world. All of the currencies could start falling in their purchasing power together, and they are already. They're already falling in their purchasing power, all the fiat currencies, and what you can buy with them. Around the world, prices of things are going up. People see this. I mean, let's take a look at goods and services, for instance, Goods and services. It's going up. People see this, and the reason why they're going up is because goods and services require people to work and produce them, right? And you got so many people around the world who aren't working. All of a sudden, because of this sickness that's went around the world, it's created an unusual situation where there's not as many goods and services being produced. But there's all this money that's being pushed into the system by the central banks to try to prop the system up. And after a while, when people see this inflation, they have expectations of more inflation. So what they do is they start to spend faster and faster. It's a worldwide hyperinflation we're heading into, not just in one country like Turkey, but every country on earth. And this is a situation that's never ever happened before. There's always been one country will have a hyperinflation, like Turkey may be heading toward hyperinflation. It'll be one country, and they'll find some other currency to use of value during the hyperinflation. Oftentimes, countries, when they have a hyperinflation, they look to the dollar as a means of or something else. They will use anything that they can get their hands on in order to still have trade and commerce. In a worldwide hyperinflation, what do they turn to for trade and commerce when all of the fiat currencies are going down simultaneously? They'll turn to anything they can. Do you know in New York City, they use Tide laundry detergent as money? And this is a fact. And they'll use anything as money. Anything can actually become money. And if you got a worldwide hyperinflation with all the currencies on Earth, everywhere are going down simultaneously, they will have to turn to something of value that's going in the opposite direction that holds its value. That's why I say it's an unusual situation. And normally in a situation like this, what they turn to is gold and silver. Yes, right? If a worldwide hyperinflation were to hit, like, people would turn to gold and silver, and in fact they are. They're turning to the physical. They want physical because they know that the opposite. Let's take a look at the silver price real quick, and I'll talk some more about this. They know that the opposite of that, all the fiat currencies are losing their purchasing power, so they are turning to gold and silver. But the opposite of that is the paper gold and silver, and they don't want that because it's connected to the paper currency and it'll be settled in the paper currency. So they want the real physical. Here's where the problem comes in, is obtaining the real physical metal. Because this is a worldwide thing, every country on earth will try to obtain that physical metal because they see a hyperinflation coming, and there'll be a transition start to occur where everybody wants that because that can retain your purchasing power in a worldwide hyperinflation. But the problem is going to come, not everybody on earth is going to be able to get real physical metal. There's not enough to go around. I mean, just take a look at what's happened with silver, we've got just a few little hints of inflation, and all the silver's starting to disappear. Gold will be next. Can you imagine when it becomes clearly obvious that we're sinking into a worldwide hyperinflation? They're going to clean all that metal up, and it's going to be gone. You're not going to be able to get any. So the people are still going to need something for trade and commerce. And they're not going to be able to get any physical metal. Bitcoin, cryptocurrencies will be available for them even when all the physical metal is gone and they can't get any physical metal. This is why I say this is an unusual situation. We're looking at them suppressing the price of these physical metals as well. Why should silver be down 60 cents today? And how did they get it down 60 cents when there's such a limited supply? See, this goes against all of the fundamental laws of trading and markets. When something is in short supply and there's a great high demand for it, the price is supposed to go up, not down. This shows absolutely that they're using the paper short contracts, paper silver in other words, to reflect in the price of the real physical metals. And anybody who's out there who says that they're not doing that has got their head in the sand. How else can they drop the price 60 cents today, down to 25.65? It's all just paper. That's what it is. And, they're going to keep the pressure on silver and everything and gold and everything, but we're moving into this hyperinflation. When we really start to get into the meat of the hyperinflation, people start to see prices go up daily. Confidence starts to be lost in the purchasing power. They're all going to want to rush into these physical metals. And there's going to be none to be bought. And the people that have it, I mean, would you sell it? Okay, you got a silver coin, right? And some other neighbor across the street, he's in dollars. And you've got a period in time where the dollar's losing, say, 10% of its purchasing power every single day. They're desperate to get out of dollars. Then you got this gold coin there, or silver coin there. You're not going to sell it to them because it's going up. It's appreciating every day. It's going up in value every day. And his dollars is going down. This desperation to get out of the dollar at a certain point, to get out of these paper currencies that are going down in flames, is an absolute desperation. And they can't get any physical metals. They're going to buy cryptos. Anyway, 25.67 for and cryptos. You won't run out of cryptos. They'll just keep breaking the decimal point down smaller and smaller. You won't run out because there is no physical. When you buy Bitcoin stuff, there's no physical. So they're not going to run out. They're just going to keep breaking that decimal point down smaller and smaller, so people are going to purchase smaller and smaller amounts of it, smaller and smaller quantities for bigger and bigger money. And so you got a situation where you got the fiat currencies going down a hole, and at a certain point, they're not going to be able to stop either. The central banks won't be able to stop cryptos, because once they hit a certain point where they've absorbed so much capital, it becomes too big to fail. It's almost getting to that point now. There's so many big companies and corporations and everything that are investing in this stuff. But still, we got Peter Schiff out there, and he's still very negative, extremely negative to cryptocurrencies. I don't think he sees the potential of what's coming. And if the central banks don't stop it soon, and I mean come down hard on it, I think they're to the point now where if they come down hard on it, they'd hurt the actual financial system. So we're in a very weird situation. Let's take a look at gold today and see what it's doing. Now, I'm not saying that gold and silver aren't going to go up in value during a worldwide hyperinflation. They'll go up exceedingly high in value, but you won't be able to get any. You won't be able to buy it. Because you know how much massive money is out there? There's millions of millionaires out there, and they're all going to get trapped at a certain point. And they're going to see their money losing value extremely fast. The desperation is going to be absolutely unbelievable to get out at a certain point. They're all going to rush for the door at a certain point. Now, I can't tell you exactly when that point is, but a few of them are starting to head for the door. But when it really comes, it's going to be like an auditorium filled with people, and somebody smells smoke and they yell fire. And there's only one little exit door. And there's like 10,000 people in the auditorium. That's going to be the pressure on gold and silver, to buy gold and silver. So you got some. You think it's not going to go up in price? People are going to really want it and desire it. It's just that they're not going to be able to get it. That's the situation. And what are they going to be able to get? Well, gold's at 1737 today, but what are they going to be able to buy? Really able to buy is this stuff. It's always going to be available for purchase. It's just that they're going to keep breaking that decimal point down smaller and smaller. So if your friends and neighbors decide to buy into cryptos, the price is not going to be like it is now. So you can, just about everybody out there can afford to buy 1% of a Bitcoin. Most people can. Most people can. If they pool their money together or whatever, it's like $500. They can afford 1/100th of a Bitcoin. Well, when the time comes when everybody's desperate to get out of these fiat currencies and they're buying into the cryptos, you're not going to be able to buy for $500 1/100th of a Bitcoin. I mean, that's when your friends and neighbors are going to be wanting to buy it. It's going to be massively higher. Massively. And going up daily. And there's never been a situation like this before in the history of the world where the whole world's went into a worldwide hyperinflation. The dollar's going to lead the way. And all of the currencies. It's a situation that was created in 1971 when Nixon took us off the gold standard. The United States dollar was connected to gold. That was its backing. And all of the other world's fiat currencies were connected to the United States dollar. Nixon, when he snipped that, it's like a balloon being held to the ground, the United States dollar and all these other fiat currencies with it. And he cut the rope. Nixon cut the rope. And the balloon started floating toward the heavens with all the other fiat currencies. It's just willy-nilly floating off. And that's what happened. And it's taken till now before they've mismanaged them to the point where they're finally losing faith in them. And they're all going to go down together. And because they're going down together, you're not really going to see the hyperinflation on the early stages like right now. Because they're all losing purchasing power simultaneously, equally. these fiat currencies. They're all falling in their purchasing power. It's at a certain point by the time you see it. See, if one individual one, like the lira, was falling right now, they notice it real quick, but they're all falling together, most of them, at the same speed. And so they're losing purchasing power, even though the US dollar index isn't showing any massive moves. There's the thing. Okay, 1,787 billion for cryptos for the Bitcoin today. And we're looking at 57,256 for the crypto, the main cryptocurrency, which is Bitcoin. Well, we got so many others. Just look down this list. Massive amount of coins. Listen, guys, if you want to buy these coins, I'm just going to tell you, Bitcoin is the trunk of the tree. And these other coins are like going out on a limb, You want to pick a nice, big, heavy, thick limb to go out on. And don't get too far away from the trunk, which is Bitcoin. So you don't want to pick, like, way down on this list, these coins if you're going to buy a coin. It might look good and everything else. But a lot of these coins way out in the list, are going to die. It's these top coins that are going to make it, along with Bitcoin, And so you want to stay in close. The closer the better. This means that you want to stay in probably the top 20 probably or something. You don't want to get too far out on that limb, Okay, Dow Jones today. We're looking at 32,679 on the Dow. It's up 51 points on the day. The Dow Jones and the stock markets are starting to hyperinflate. And they've been for a little while now. It's infinity how high the stock market can go as long as the currency is losing value. Take a look at some of these countries like Venezuela and what happens with their stock market. Okay, crude oil today, 61.74 for crude oil. Crude oil's bouncing back a little bit. Did have a little bit of a bearish over the last, let's take a look at the 1 month chart and we can see this little drop we had right here. We were up to 66.02. Dropped down to 60 bucks. Now we're back up to 61.74. Move index today, 68.80. Going along sideways. Bonds and rates. Now, we're seeing some pressure come off of the long end of the yield curve today. It's at 1.69, the US 10-year today. And it's down almost 4 basis points. The Fed must be breathing a sigh of relief to see these yields backing off a little bit, They must be happy about that. The US dollar index today, 91.88, and it's slowly descending as the day progresses. So the dollar's losing a little bit of steam today. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.